Hello everyone, welcome back. I got some really good ones for you today on this Thursday, May 25th, 2023. A lot's been going on with the markets, so let's dive right into it, shall we? High growth tech, something we talk about a lot on this channel over the last year. The Amazons, Googles, Nvidias, Oracles of the world, the Teslas of the world. Doing really well. Nvidia today putting on like 25%, insane. I saw some kid on Reddit on like Wall Street Bets. He had lost $80,000 trading options during the banking crisis, and then went ahead and bought a bunch of puts in Nvidia yesterday, meaning he thought the price of Nvidia was like about to fall. You had Kramer out like, pumping it, the MSM pumping it, just this mania phase for this bull run we're seeing in AI. And so Nvidia is, up and away. And then you got this kid that's trying to win his money back, comes in, buys a bunch of puts, and then after hours yesterday, Nvidia was up like 25%, crushed him, like bad. So, be careful about, don't trade options. How about that? The natural evolution I've noticed of every options trader is like the first week you make $3,000. By week 5, you're up $9,000. By week 13, you're up 47 grand. And then by week 50, you're like down 900 grand, And maybe that's a bit of the Dunning-Kruger effect at play. Go ahead and look up the Dunning-Kruger effect chart. Really interesting, and I highly recommend it. So check out the Dunning-Kruger effect. So for anyone that's in Nvidia, congratulations. That's pretty awesome. We like Nvidia on this channel. We like Facebook, Amazon, Apple, Netflix, Google, Microsoft, Intel, Nvidia, Oracle, Tesla. A lot of these high growth tech companies really do have a lot to offer. And if you're wondering like why, I don't get it, what makes tech so special? Well, think of it like this. Right now, with this generative AI boom we're seeing, Nvidia is sucking up every graphic designer into their straw. Similarly to how Google sucked every library and all the knowledge known to man up into their straw, and Honeywell sucked every cashier up into their straw by creating the U-Scan machine, and how every retail supply chain was sucked up into Amazon's straw, and how every gas-powered automobile is getting sucked up into Tesla's share price. You're seeing the same thing right now with Nvidia and generative AI. As Nvidia hogs most of the market share and leads the charge for this generative AI and computation speed boom, they basically are sucking up every graphic designer in the country into their straw right now. If every company is going to be going to Nvidia for generative AI to do their commercials and their advertising and their media and their consulting, we're watching a bunch of careers and people that would otherwise be, working and making a paycheck just get sucked up into Nvidia's share price, and they're all that value is being accrued to the shareholders. Now, I would be very careful right now about chasing Nvidia. So if you don't own any, I would wait for a pullback, because I think this has gotten completely out of control. So I think everyone in the high growth tech world, although they're doing quite well and, sit tight and stay right, I think it's overextended here. But in this channel, we've talked a lot about high growth tech, gold, energy, crypto. Those are kind of like the table legs for the entire channel, So it's good to see Amazon, Netflix, Google, Facebook, Microsoft, Oracle, Nvidia, Intel, all looking to benefit from what's going on with Nvidia, but I'd be very careful about chasing. So wouldn't surprise me at all to see a pretty big pullback tomorrow. But guys, if you were to, buy puts or short Nvidia or bet against Nvidia's share price in any way, just understand that you're taking money and then potentially jumping out onto the train track and just getting hit by a 300-mile-an-hour train. So, bubbles, what do? People say, oh, bubbles, they burst. Bubbles double, then burst. So right now, Nvidia is just in a complete runaway. It's going straight up. One thing that is kind of freaky and no one's paying attention to, and I wonder if reality will set in tomorrow, the 10-year yield. Look up the 10-year yield right now. It's like 3.81%. Is no one noticing the 10-year yield rising? As the 10-year yield rises like that, that's the bond bubble getting smaller, and kind of like, if the bond bubble starts to buckle and that 10-year yield just keeps rising, it's gonna create problems in the stock market. Normally when bond yields rise, the tech heavy NASDAQ, so like Nvidia, Tesla, Amazon, Google, when bond yields go up, those fall in price. So this whole bond yields are going up and then tech is just ripping the face off the market. It's really weird to me. And it tells me something's got to give. Either that 10-year yield needs to come down and prove the stock market right, but I doubt that, and I'll explain why. Or the stock market needs to wake up tomorrow and realize, dang, you're at like 3.81%. That's way too high for my liking. I need to sell off. And generally, I would bet on that happening. If you're ever in a situation where you're like, one market is wrong here, it's either the bond market or the stock market. Well, chances are the stock market's wrong, because the bond market is exponentially larger than the stock market, than any other market on planet Earth, like the deepest, widest pool of liquidity ever. And there is an old adage that the bond market is never wrong. So if you're getting mixed signals and you're like, someone needs to be the authority here, the bond market will be, okay? I would recommend paying much more attention to the bond market and listening to the bond market, and then based off the cues you're getting from the bond market, dink around in the stock market or not. But from what I'm seeing right now, bond yields have come up too much. The 10-year yield at 3.81%, that's a little bit freaky, and I would think that would spook the stock market. So it's crazy. The NASDAQ should be down 2% today with that 10-year yield, not up 2%. So I'm wondering if tomorrow the NASDAQ kind of gives a lot of that back. And we could easily end up in a situation tomorrow where the market kind of wakes up in a hangover over what just happened in Nvidia, and maybe Nvidia even coughs up like 15%. Something like that would not surprise me. But again, don't bet against Nvidia here. Don't bet against freight trains moving 300 miles an hour. And don't trade options. How about that? Try that on for size. And don't short anything. The best thing you can do, one of the best things you can do right out of the gate to become a successful investor, is to push your time horizon out as far as humanly possible. So ask yourself, is this company going to still exist in 20 years? That's like a really good starting point. Sounds like a no-brainer, but people really don't look at it that way. And if I were going to buy and hold stocks, the first question I would ask is this company still going to exist in 50 years? And if the answer is yes, well, you're off to a pretty good start. And if the answer is I don't know, you should probably just avoid it. So these people that are, condensing their time frame by trading options or shorting the market, you don't have time to wait. You don't have time to be wrong. And so that generally kills a lot of traders. And I watched it yesterday. This kid who's lost $80,000 already in bank stocks on Reddit wants to buy a bunch of Nvidia puts yesterday. Got his face ripped off. Because with Nvidia moving up 26%, he lost a lot more than 26% on those puts. We'll just put it that way. You could even end up in a situation where you're like, with trading options, you end up owing your broker way more than you started with. Same with shorting. But that's kind of a different topic for a different day. I don't really want to get into that right now. I just want to drive home the point that the 10-year yield is like moving up, and it's 3.8% right now, and I'm wondering if the stock market's going to wake up tomorrow and realize that and sell off, because it's kind of ridiculous to see tech performing so well in the face of rising yields. But we'll take it, because we love high growth tech, we love crypto, we love gold, we love energy. It's really all I got for you for right now. Thanks for hanging out with me. Like, subscribe, comment, share. We're just going to keep going, all right? Till next time.